Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag. Well, the ag markets this morning leaning mostly lower with the exception of some of the wheat contracts. And Randy, let's start off with soybeans. We had a tough down day on Friday and new contract lows here again this morning. And a lot of this is about weather, isn't it?
It is. I mean, we were seeing last week's weather. At the beginning of last week, we were expecting hot and dry for, it was in the 1 to 5, it was in the 6 to 10, the 11 to 15. And it looked like we were going to see some pretty rough weather when soybeans were going to go into 90% of the crop was going to go into potting. And that helped bring some good support into the marketplace. Well, towards the end of the last week, Thursday, Friday, they came out with a change in the weather forecast, which all of a sudden brought some rains into the 1 to 5 and the 6 to 10, and it took the 11 to 15 to be normal weather, normal temps, normal precip, and that really brought some pressure in on the soybeans.
Yeah, and the soybean oil market down very hard again this morning after a disaster on Friday, and some of that is due to this SRE decision from the courts impacting blending, right?
It is. I mean, EPA is going to they're sending EPA back to the drawing board to review this. And that certainly is never a good thing when you have to go back and take a look at something a second time. So that is adding a little bit of pressure in, and not just the soybean oil, but it's also pushing pressure on, the canola market, which is something we watch up here in the Northern Plains. So it's impacting basically the vegetable oil complex that goes towards fuel.
No doubt. And obviously it impacted the corn market on Friday, but corn's holding up a lot better here today. And is that just because the wheat market's up, or what's going on there?
Well, I think it's partly because of the wheat. Wheat's trying to see some strength after last week's debacle as well. But I think corn also has had some decent demand. We continue to see exports, trend well. I mean, we're going to make USDA's projections. That is, right now we kind of assume that because of the good sales that we've been seeing. So demand has been good for corn, but we're also a little bit worried about, the Northern Plains, North Dakota, Minnesota, South Dakota, which is now going into pollination. Those three states, are in the top 10 for acres for corn in the U.S., and we're looking at them going through their critical crop development timeframe with hot and dry temperatures.
Yeah, it's kind of a tale of two different weather stories here, the near term versus the long term, and which crop it's going to impact, corn versus beans. So that's supporting the corn market this morning. But, kind of the general consensus here is that yields are probably going to be up in both corn and soybeans in the WASDE coming up. Is that right?
Yeah, that's right. I mean, the Eastern Corn Belt is looking phenomenal, and they're not looking at any threatening weather. You look at their 10-day forecast, there's nothing in the 90s, and they've got some chances of rain. So the Eastern Corn Belt continues to see pretty good growing conditions, and that's where the increase in the yield is likely going to be coming from.
Will there be an offset from acres going down?
I don't know if we'll see that in this one. I mean, it's kind of early for USDA to make that projections. I think they're still adding up the prevent plant acres. And of course, we're not going to really see the total abandonment of acres until we likely get into the September, October report after harvest has started because of all the drowned out that we've seen up here in the north.
When does the FSA report for August come in on acreage? Is it going to be after the WASDE or when?
It will be after the WASDE. I would bet that it won't be till after probably August 15th, and September 15th would be the time frame when we see the USDA's or FSA's final numbers to come out.
So what do you think the market is trading for yield on corn and soybeans at this point?
No, that's a good question. I think, we're probably closer to like a 183. At this point, that seems to be the number that a lot are throwing out. But, again, you've got, like you mentioned, the tale of two different regions where, the West, I think the yields aren't going to be as good, but it's going to just be how good can the East be.
Right. So we mentioned corn being held up here a little bit by the wheat market, which as we speak is actually starting to push into negative territory for the most part as well. But, let's talk about that market. Are we getting close to lows? We scored new contract lows in both of the winter wheat classes last week. And obviously the spring wheat has been impacted by the results of the wheat tour up there, right?
It has. I mean, the wheat tour confirmed what USDA told us in their July report, and that is that we have the potential for a very large crop coming in as far as North Dakota is concerned with the spring wheat. So that kind of put some pressure on us last week. I would hope that we can be putting in a bottom, but we're still missing the biggest ingredient to help bring this market up, and that is demand. We really just need to start getting some export demand to help prop this market up. And until that happens, it's likely going to drift with corn and soybeans.
There was some concern last week about heat and dryness in the northern plains, maybe some of the Canadian prairie spring wheat areas. Is that still in the forecast?
It still is. I mean, we're still looking at hot and dry conditions for the next 5 to 6 days, where we're looking at temps 90 or above. Moisture. I mean, we've been getting some showers pop up, but nothing really significant. But we are, there is quite a bit of disease that's being spread because of the wet conditions. A lot of areas have been getting have moisture, and we've got the damp ground, and we're getting some pretty heavy dews in the morning. So there's still a lot of concerns about scab going through the crop at this point.
Absolutely. Wheat market, do you think the fact that dollar's higher may be curbing some of the initial buying? Is that part of it?
Well, I think that's adding to it. And then we're hearing, the good shipping conditions, or at least good shipments coming out of the Ukraine. So I think that's adding to it a little bit. I think it's going to take until we get into late fall, early winter before we start to see demand. Once Russia starts to, see a little bit lower export sales, once we start to see them suffer a little bit and lose a few exports, then the U.S. can maybe start to see a little bit.
We know that a lot of this last pullback here in the grains towards the end of last week, even this morning, is due to fund selling. But are farmers selling at these levels or not, Randy?
There's not a lot of movement. I mean, there's grain moving, but it's been at sales that have taken place, before. There's some basis contracts that are being pretty attractive to get farmers to deliver on basis contracts right now. End users seem to be the biggest ones, and it's more so on the corn side. And that we're seeing that even into Nebraska, where you're almost seeing, 90 over basis in some levels for feedlots that need to get grain. So they're seeing a lot more on the basis side that's trying to make up for what the futures drop is.
And the cattle market also lowered this morning. We did have strong cash and cutout values to close out the week last week. So this is a little bit disappointing. Do you think it's partially some hedge pressure?
I do. I think, right now, producers are looking at, back up to highs that what we haven't seen since October. And, we've had a pretty good run in this market last week. And I think a lot of them are seeing what's going on in the grains, and they're worried that that could happen in the cattle. Last year, we saw the cattle market sell off pretty hard once we got into September through December. And I think a lot of producers are a little bit scared of that happening again. Seasonally, we do normally peak late summer, early fall. So I think there is a lot of hedge pressure that's going on, and a lot of producers are protecting their calves, getting ready for what could be a little bit of a downturn.
Yeah, it really feels like a risk-off morning. Of course, we do have the Fed meeting coming up here this week, and we're not really expecting any change in interest rates. But, we've had a wild ride in some of these outside markets like the stock market too, haven't we?
We have, and a lot of that is tied to the uncertainty of what's going on, with Biden stepping out of the race and Harris stepping in. And, so I think there's a lot of uncertainty of what the makeup is going to be moving forward. And that now we might have a presidential race that is actually going to be a race. And so I think that's helped to cause a little bit of a movement in the stock market. As far as the cattle markets, I think, the demand is coming into play. That I think is helping. But overall, I think it's just a lot of uncertainty that's causing these markets to jump back and forth.
And your thoughts about the Fed meeting this week? Is that true that we probably aren't going to see any change in their course here, at least for this meeting?
I don't think so. I don't look for anything to change in this meeting. I think the interest rates will be left unchanged. I think they will give us a bigger hint or idea of what their idea is going to be in September, as everybody is thinking that they will see a rate reduction take place in the September meeting. And I think they'll give us a little better idea of that.
Yeah, I think the Fed fund futures are kind of starting to price that in, at least, or indicating that. All right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.